Support and resistance. This is the oldest play in the book, but don't think for 1 minute that because it's ancient that it's less valuable or of no use. The exact opposite is true. Support and resistance levels are a gift to traders, and we should be using them extensively. Price on a chart moves in a zigzag motion. It'll go up and down. If price is moving sideways, going up, going down, it'll always be doing it in a zigzag fashion. This is an example of how a market is moving upwards. It's doing it in a zigzag fashion. In the example from the previous slide, you can clearly see the market is moving in a general upward motion, but along the way, it's making corrections, also known as pullbacks, where it moves down instead of up. This again is that slide. It's going from the lower left to the upper right, but as it's doing it, it's making moves up, but also making moves down. These points where the market changes direction are the areas we call support and resistance. Price will get to a certain level and then be forced to change direction. This can be a temporary and small change in direction, or it can be a bigger and more permanent change in direction. What's interesting about these levels is that when price is rejected once at a certain level, it will tend to be rejected there again. Look at the following image. You will see it's the same image as the previous page, but red horizontal lines show us areas where the price is affected and gets turned around. This red horizontal line shows us areas where the price bounces off repeatedly. Price is initially rejected at the left of the image. This is the initial area of resistance. Next, price moves down, but then tries to go back up again. It does move up, but when it approaches the previous level of rejection, it gets rejected again. Eventually, price does manage to break through this level, but what happens next is really noteworthy. Once price moves above the initial level of resistance, it comes back down and bounces off that exact same level. This is now a level of support. And as you notice, price is rejected from this level 3 times in total before breaking below it. This is that same image again. The arrows on the left-hand side are showing where the price has come up, been rejected, price has come back up, rejected, and then finally it broke through. And then from above, it comes back down to that same level and gets rejected and bounces back up again. There are 3 things that we can learn from this simple example. 1, price will be attracted to a previous level of support or resistance. 2, price will be rejected from these levels of support and resistance. And 3, when price does break through a level of support or resistance, it will have a tendency to keep going. Let's get a little more specific. Support. This is a term from the old floor trader days. This was when you could only make money in a rising market. You've heard the buy low, sell high adage. Support is a level where price drops to and gets turned back up. It will come down and then be supported as though it's hit an invisible floor. This is where the market is being supported from losing any further value. In Forex, you can make money in both directions. This is simply an explanation of the term and how it related to the old stock market. Generally, the support levels you see on the chart will be V-shaped. This makes them easy to identify. V-shaped valleys denote levels of support. Price falls and then bounces back up. There are major support levels and there are minor support levels. The major levels are the one that really jump out at you from the chart, but there are more subtle levels that are acting as support as well. Price will make smaller zigzag moves as it makes its way. The downward motions made by the market in the previous image aren't as pronounced as the upward movements, but they are still there and they are worth noting when we do our market assessment. In the upcoming image, you will see the red lines from the previous chart. These show the major levels of support. They are very pronounced and easy to see. The green circles will show you the minor levels of support. The market movement in these minor areas are not as large, but the market did still make a rise and then it moved down, and instead of continuing down, the market was turned away or bounced off a level. The red lines are the major levels of support, and the green circles are the minor levels of support. They're more subtle, but they are still there. On the following slide is the same chart, but with a bold black line to show you how the market moves. The small red arrows are all the different points where the market hits the imaginary floor. This gives you a better, cleaner overall view of how the market is moving and where all the turns happen. Resistance. This is also a term from the old floor trader days. Resistance when the price climbs up and hits a ceiling and resists moving any higher. The older stock traders would view this as the market being resistant to further gains. On a chart, resistance levels will look like peaks of a mountain or an upside down V shape. Like support levels, there are major and minor resistance levels. The major levels will be the peaks that stand alone, very distinct and individual looking. The minor levels will be a little more subtle. The red lines are the major levels of resistance, and the green circles are the minor levels of resistance. Again, they're a little more subtle, but they are definitely there. These levels are not going to be a huge part of our trading, but they will be present in our decision making. We are going to use support and resistance levels to help us decide if a trade should be taken or not, and they will also come in handy when we are looking for profit targets to be aiming for. The more we familiarize ourselves with these levels, the simpler our trading decisions will become. On the following slide is a line chart graphic of support and resistance levels. The line chart representation might be easier to look at and understand. So the red peaks are areas of resistance. Price climbs up and then bounces down. The green valleys are areas of support, where the market drops and then bounces back up. Below is yet another image of the same graphic, this time just with the lines. Support becomes resistance. Very often, when price breaks through one of these support or resistance levels, we will see that the price comes back to test this level. For example, when price finds a level of support, once it breaks below it, it will often come back up to meet this previous support level now as resistance. This is a great illustration of how price bounces off of a level, comes down, bounces off its support at that point. Price breaks through that level and drops below it. But then what happens next is it rises up to that previous level. It was support, now is resistance, and price will bounce down. On the next slide, you'll see an example of support turning into resistance on a real price chart. Price finds support, price breaks through support, and then support turns into resistance. Resistance becomes support. The opposite is also true. When the price finds a level of resistance, it may eventually break through and then turn around to use that level as support. Price rises up and finds a resistance level. So then it bounces down and then attacks that level again, and price breaks through that level of resistance. Once it breaks through and moves above, price will turn around, come back down, and use that previous resistance level as support. On the next slide, you'll see an example of resistance turning into support on a real price chart. Price finds resistance, price breaks through resistance, and then resistance turns into support. Knowing about support and resistance will help you better understand where the market can potentially stop, turn around, or blast off. It'll help you in your trading. Thank you for watching.